The physician's mortgage has some benefits and some drawbacks. The main benefit that you've probably heard of is that you don't have to put any money down. Normally, with a mortgage, you have to put down 5%, 10%, or 20% of the purchase price in order to buy a home. But when you're freshly out of training, or even a couple of years after, you may not have that much in savings. And so a lot of banks will offer this physician's mortgage as an option where you can put 0% down. And even though you put down less than 20%, you do not have to pay what is normally charged as private mortgage insurance. It tends to be around 0.4% added on top of the interest rate if you put down less than 20%. This is on a conventional mortgage. But if you use a physician's mortgage, they waive that at cost. So that can be beneficial to you. But on the other hand, there are two drawbacks. One, sometimes the interest rates on the physician's mortgage track are higher than the conventional mortgage. So the reduction of the PMI, the private mortgage insurance rate, it may not matter because your interest rate on the physician's mortgage is higher. And then the other drawback is that the banking institution, they may have some supplemental requirements of you. If you get a physician's loan through them, they may want to compel you to use other services like insurance or investment management or financial advice or planning. And so you want to make sure that if you're signing up for something that you think is just for the mortgage, but in fact, they're going to be wanting you to become like a private client, like where you have, you utilize more of their services as a result, and you don't really want to do that. Just be wary of those sort of arrangements. The last thing I want to say too is that even though you can put down 0% for a physician's loan, you're going to be borrowing quite a bit of money. And so it's very, very important to recognize that this is a really big decision, and you want to make sure that it fits in with your retirement savings plan and with any other savings that you need to have or debt payoff that you have, like your student loans. And then one other thing, even if you put down 0%, there are still closing costs. So you have like title insurance, appraisal, inspection, county recording fees, all sorts of stuff. It tends to be around 3% of the purchase price. So even if you put 0% down on an equity on the home, you still have to have money for those closing costs. So if it's a $300,000 home, you still need to have about $9,000 in cash available for this transaction. Keep those things in mind as you decide whether a physician's mortgage is right for you.